What's up, guys? Welcome back to Roensch Capital Charts. Today we're taking a look at NIO stock, ticker symbol NIO, on a variety of time frames in anticipation of the next trading day, Monday, February 12th. Well, NIO stock on Friday finished the day up 11 cents per share, 1.89%, falling just, about 3 cents or so in the after hours. Listen, as always with after hours movement, whether it's in your favor or against your current sentiment, you absolutely have to take it with a grain of salt. Why? That right there is why. That's the volume, ridiculously low, almost always in the after hours, unless we see a huge volatility event specific to that particular stock, maybe earnings, right? Usually volume is so low that we have to take it with a grain of salt. But this is the 1 minute chart here. Let's move on to the 5 minute and get some beefed up volume data per candle and take a look and see if there's any very obvious signals as far as market sentiment with the biggest sample size possible that correlate with obvious market moves. So for example, we have this little consolidation off the open and then a dump. Did we see a fade in volume or a pump in volume on the dump compared to the previous candles? And the answer is, it's not really definitive enough for me to say yes. Okay, what I'm looking for here is I'm looking at, let's say I'm a bull. On big upside moves, I want to see a clear increase in volume, and on fades, I want to see a clear decrease in volume. The opposite is true if I'm a bear. And here on NIO stock from Friday, there's just not enough definitive data, or obvious data, I should say, to really get a lot here out of the 5 minute chart. So let's move on. Let's not waste any more time here. Let's get really contextual with the day-to-day self-fulfilling prophecy levels, like the 50 period on the 30 minute and the 200 period on the 30 minute chart. Again, specifically here, looking at the 30 minute, we will then look at the 4 hour and the daily. By the way, if you guys want to get my personal scalp setup alerts every single trading day, I'm actually alerting the setup as I'm watching it to give you guys a view into what I'm actually looking at. I have found that to be far more effective and actually helpful to people who are learning, rather than just alerting trades in real time that never actually end up helping anybody. And it's always too far gone by the time the thing gets alerted anyway. I don't think that's helpful. Alerting the actual setup ahead of time, I think, is an incredibly effective way to learn. Take a look at that first link in the pinned comment. You can join Gold or Gold Plus if you want to add on swing trades. Gold Plus UOA to add a human verified unusual options activity, or maybe even Platinum one-on-one coaching, which gets all of it plus the one-on-one. The price does go up over time, but you can get grandfathered in at the current rate, and if you do, you'll retain that price for as long as you keep the membership. Hope to see you join. Let's move on. Now look here, this 30 minute chart is incredibly relevant right now. You can see that 50 period moving average is less than 1% away to the downside. So listen here, here's what I'm watching. From a bullish perspective, I want to see that 50 period upon a retest hold hard as a support level, okay, and bounce up out of that hole, making our way up towards $6 a share here on NIO. If I'm a bear, and bulls understand the bearish psychology, the bears are going to want to see that snap to the downside and make our way back down toward that 200 period moving average, specifically here, looking at the 30 minute chart. Okay, let's move on now to the 4 hour. You can see here that 200 period on the 4 hour up above $7 a share, not immediately relevant, but what is relevant is that 50 period, which is currently right around $5.79 a share. Okay, so that on the 4 hour is approximately 1.75% away to the downside. So listen, if I'm a bull here, I want to see this name getting, again, up through $6 a share, curling as quickly as possible. It's going to take some time. It's the 4 hour chart. But getting that 50 period to curl upside as quickly as possible. And if we see a test of this on the 4 hour, of course, I want to see that hold as support. Bears, really simple. Okay, break downside beneath that 50 period here on the 4 hour. Get back down below. Ideally, if you're a bear, reclaim that kind of downtrend, rejecting off the 50 period, moving downside. Okay. Let's move on to the most important chart of all. That's going to be the daily. All right, we of course have earnings coming up here on February 29th before the market opens. But let's take a look zoomed in contextually on the daily here. That 50-day moving average, just above $7 a share. Neither of these moving averages are incredibly relevant in the short term. Of course, I'm keeping an eye on that 50. But listen, the daily chart on NIO here is really simple. $6 a share is an incredibly psychological level. And, to the downside, of course, $5 a share is also very psychological, but $6 is the immediately relevant level. Here's what I'm watching. If I'm a bull, I'm thinking one thing on the daily chart. Reclaim 6. Get above 6. Retest it, claim it as support, bounce up out of that hole. From there, I don't care if we go upside or sideways, just get above 6. You know, it's really important when we reclaim big psychological levels to just hold them. It's almost as important as continuing to move upside if you're a bull, right? Just get above 6. Even if we retest it, hold it as support, and ideally trade sideways or bounce up out of that hole. Just get above 6. If you're a bear, it's even more simple. Reject 6 as hard as possible. Ideally, make our way down toward that $5 a share region as soon as we can. And listen, bulls, you got to understand the bearish psychology. It's really important to understand the opposite side, right? Understand that other sentiment. I know it doesn't feel good, but it's an absolute necessity to do so. Now, implied volatility. This is really important whether you're trading options or just stock. Currently sitting in the mid to high range compared to normal or to the recent past. Okay, you can see that IV was recently as high as over 100%. So, you know, if you bought options in the last few days, you likely have experienced some IV crush. This right here, this fall is your culprit. Of course, that is priced into your contracts through the Greek Vega. Okay, understand the higher that goes, the higher the potential risk for IV crush is. It's not the end of the world. Just take that into consideration. All right, and the lower this goes, okay, as you get below that equilibrium, which I would put somewhere around here in this time frame here, looking back toward like September, the lower that goes, not only the more comfortable the options chain considers the stock at the current price, but also the more potential new options buyers have to potentially see some IV pump if we were to see that, you know, they buy that when it's low and then it goes back upside. Of course, you still have to be correct directionally, but that can help you out regardless. But, you know, listen here, being that IV higher typically means that the option chain is pricing in a little bit more volatility, and the lower it is, they're pricing in less volatility, aka comfort. If you're a bull and the stock is moving lower, I mean, think about this, right? Ideally, I'd want to see IV high, because that shows that the stock maybe isn't being priced as so comfortable down in the lower region by the options traders. But if you're a bear and the stock's moving lower, you want IV as low as possible, ideally, right? Because that means that the options traders are considering the stock comfortable down there. So IV is a little bit higher as the stock is in this $5 to $6 range. From a bullish perspective, I think you'd want to see that. Okay, if the stock is where it is anyway, ideally you'd want those options traders considering it not so comfortable down here. All right, let's take a look now at the options bias here in the chain from Friday. No, not a massive sample size of contracts traded, but, you know, 98,000. Understand that we can't look for 1 million out of NIO every day, okay? The lower that volume goes, the more you have to take it with a grain of salt, because one big trader could throw it off. But let's consider this here, because this is really, really biased. 76,900 calls, 21,000 puts. Massively leaning to the call side. The short-term speculators, the 0 to 20 delta, those short-dated out-of-the-money contracts, 33,000 calls, 6,200 puts. Okay? Both the overall ratio and the short-term, both heavily biased to the bullish side, but also, again, understand, it's not a massive, massive sample size. 98,000 on the day. Just understand that the lower that volume is, the more of a grain of salt you have to take it. And as on top of that, risk management is number one around here. So always, always manage your risk. This is just one factor of many. And the options traders, listen, they can and oftentimes are wrong, right? Listen, leave a comment. Let me know. Would you guys like to see me continue to cover NIO here in the near future? Curious, that feedback helps out tremendously. And if you got value out of the video, please subscribe to the channel. Our goal is 1,000 in the next 2 weeks, and I think we can do it with your help. Appreciate you, and I'll see you in the next one.